Today's March 13th, 2023. Current Bitcoin price is $24,454.
Welcome to the BitBite podcast, your source for news and information about Bitcoin and the cryptocurrency space. This podcast is meant for educational and entertainment purposes only and is not financial advice.
What's going on, Rick?
Oh, surviving out there.
Yeah, how was your time change Monday?
Not exactly great, but could be worse.
I was supposed to go to a meeting today at 6 o'clock. I completely forgot about it. So that was fun. It's like, oh,
That was real bad.
my bad. I forgot I was supposed to be there. You know what? I'm thrown off today. So last time we recorded, we were talking about Silicon Valley Bank and their demise,
Yes.
right? We saw Silvergate kind of led the pack, and then Silicon Valley Bank. And I want to say Silicon Valley Bank is like the 14th largest bank in the United States.
Yep.
I know they're in the top 20. And it was funny because, our last podcast, we were talking about this, and I talked to my wife a little bit about it too, and she was looking today, and there's not, unless you're looking directly in the financial news, there's not a whole lot of information about this stuff going on right now,
Yeah.
which is kind of weird. I mean, I guess it's somewhat to be expected, but
I was gonna say, yeah, it's not outside of the norm nowadays. Unless you're looking for it, you have no idea.
and then you had sent me a video yesterday from Janet Yellen, right?
Right.
And she was basically saying they weren't going to do anything, or what did she say in her little video there?
Well, she was basically saying that the American institution is fine, and they weren't gonna do anything.
And shortly, later on last night, we did get a message from the Fed and the FDIC and the treasury saying that they're basically we're going to make sure that all Silicon Valley Bank depositors were going to be made whole, correct?
Correct.
So what does that mean? Where are they getting that money from?
Well, they're getting it from the printing press, obviously. But
Can you say debasement? Yeah. Go ahead. What were we going to say?
well, the thing that's kind of scary about that is, I don't know what the full terms of this are, but it's up to what you're insured on, and you'll get half of the ballots, and then maybe another. Yeah, I don't know what the time frame is to get the other half, but it could be a while, like years.
Yeah. Well, and I'm curious about that. I mean, so from what I understand, they're going to do, so they kept on saying, well, this is not going to be paid for by the taxpayer. But from what I understand, they're going to charge an assessment to all other banks to cover this.
Yeah, and that's not going to get charged back to the regular people.
I'm like, and it's the same thing I always go back to whenever they're like, well, we're not going to charge people extra taxes. We're going to charge the corporations. It's like, where do you think they get that money?
Yeah. What is that corporation going to do to cover that cost?
They're going to raise prices. They're going to do whatever they have to, right? Or they're going to basically put it out to the consumer.
Exactly.
So I always wonder about that whenever they're like, oh, well, no, the bank's going to pay for it, not you. Oh, well, that's fine. Well, I'm sorry. Where's the bank get its money? Oh, man, it kills me. But yeah, so we were on the verge of, well, and I mean, I can't say we're away from that verge, but we're on the verge of another big collapse like 2008, correct?
Correct. I mean, from what I can tell, yeah.
So I pulled up some charts, a few different charts. There was banks that actually stopped trading today. And there were some big losers. Western Alliance Bank Corporation common stock was down nearly 47% at the close of day today. PacWest Bank Corp was down 21% at the close of business today.
Still a heck of a lot better than 47.
Yeah. First Republic Bank common stock was down 62%. at the close of today.
Oof.
Zion's Bank Corporation, North America, was down 26%. Let's see. Let's go through some of the ones. Charles Schwab Corporation was down 11%. Huntington Bank, I'm guessing that one's out of California, but I could be wrong, was down 17%. I'm sure a lot of these are kind of regional banks. They may not be some of the bigger ones, but looking like JP Morgan Chase was down 1.8% today. Bank of America was down 5.81% today. Wells Fargo, go ahead.
Well, I was going to say that's much significantly smaller losses as far as percentage-wise goes, right?
Yeah, the one that I'm reading now, like this, the last list that I read where you had those double-digit drawdowns, they actually halted trading on those stocks today, or at least for their common stocks. These ones were just, from what I understand, kind of continued trading. Goldman Sachs was down 3.71%. Charles Schwab, I already talked about them, we're down 11.57%. Citigroup was down 7.45%. Let's see. Some of these I don't even know who they are, but Barclays was down 3.85%. I mean, so there were some definite hits today all across the banking industry. And really, we still don't know to what extent all this is going to play out, right?
Right.
And at the time, I think, I was kind of unsure what was going to happen with the Bitcoin price, but we've seen, surprisingly, when banks were failing, Bitcoin was rallying.
Maybe not so surprising, but yeah. I mean, when we recorded a couple of days ago, the price of Bitcoin was like 20,200, and now it's over 24,000.
Mm-hmm. Yeah. So just to keep in mind, like everything that happened with Silicon Valley Bank happened over the weekend, right? Like it basically closed the business on Friday. Bitcoin, we recorded Saturday morning, and Bitcoin was down in the laurels or down in the dumps. Well, not dumps, but it was, in 20,000, low 20,000, 20,200, I think is what it was, or something along those lines. But Bitcoin runs 24/7. There's no stopping Bitcoin. You can't halt trading on Bitcoin. Bitcoin runs when the banks are closed, and there's nobody that's going to tell you, oh, well, you can't withdraw your money from Bitcoin. You can always do whatever you want to with Bitcoin. I can send it from here to somebody in Russia or Taiwan or Singapore, Korea, whatever the case may be. I can send it all over the world at any time. And it rallied rather well. Gold actually did okay too. Not nearly.
What's it at now?
But gold's at $1,906.48. So it's down 0.35% right now, but it did fairly well. It was up like, I think it went up almost 2% today. And it looks like it's lost it all, but it's, gold is always a good hedge, I think. The problem is this is the paper gold. So surprisingly, and this is nothing compared to what we were talking about earlier, apparently Putin changed the price of gold, at his own whim in Russia not too long ago.
What do you mean he changed it? Did he peg how many rubles per gold?
Yeah. Yeah, he did.
So did
he just decided what it was going to be.
Well, did he increase the value or the amount of rubles, which is technically decreasing the value of the ruble?
Yes, I think he did. I think the price of gold compared to the ruble was up higher.
Yeah. Well, most people don't know this, but FDR did basically the same thing. Once they did the gold confiscation from the American people, they took what the dollar, it was like $20 per ounce at the time, roughly, and then they changed it to like 35 or something like that.
Yeah, that sounds right. It was like it went up to like $35, from what I understand. So, yeah, scary times all the way around. So, I wanted to talk to you about this, like, what can you tell me about why, or at least from what we understand as to why Silicon Valley Bank collapsed? What happened? Can you give us a kind of a short thumbnail sketch, like 50,000 foot level?
Well, I'll give you a 10,000 foot level real quick, and it's called diversity, equity, and inclusion.
Okay.
Oh, never mind. Never mind. That was part of their problem. Probably not most of it. From what I understand, a lot of banks, as part of their balance sheet, they own, bonds and this type of thing. And especially American bonds lately, with the Federal Reserve increasing the rate of interest, let's say they bought these bonds back a year or two ago, and let's say they were getting, I don't know, we'll just pull some numbers out. Let's say they were getting 3% per, interest rate on it. And then nowadays with the Fed keeping, they keep upping the interest rates. And now let's say the interest rates now are going for 5 or 6%.
Yeah.
Basically, if you're looking to take those assets and then sell them on the market to get your money back, they're going to be worthless. Technically, they're even worthless just if you look at the rate of inflation. You're only getting 3% back on it when we've been getting 6% inflation. I mean, you're losing money right there to begin with. So,
right. And I think I think kind of like to kind of back it up just a little bit, the reason why they buy those bonds, if you remember 2 years ago approximately, right, our interest rate effectively was 0.
Right.
So if you wanted to get anything that was going to give you some return, some decent yield, you needed to buy like a bond that was going to offer you 3% when the Federal Reserve interest rate was 0%, basically, right? So
right.
You want 0% to 3%. And at the time, too, if you recall, like, I think and we've mentioned this on the podcast, the Fed said they hadn't planned on raising interest rates for 10 years when all this stuff was going on.
Right.
So, yeah, you're going to buy a 10-year note that's giving you a promised 3% whenever your interest rate from the Fed is 0%. But now we've seen that correct, right? And that goes back to what you were saying, where now it's worthless.
Yes. Trying to sell that on the open market. Good luck.
Yeah, because I mean, you've got people that can be like, well, why would I buy that when I can get a 5% return from this Federal Reserve interest rate? Why would I buy that treasury bond that's only giving me 3%? I'm losing money.
Yep.
And how many banks out there have done this, you think?
I think the majority have some type of holdings in this asset that have basically taken a beating over the past, say 6 months or year.
You could say 18 months, basically, I think is what it's been since we've started hiking this interest rate. Okay. I think, I mean, I don't know. I don't know if this is kind of early knockings. Now, there's been a lot of speculation as to whether or not, the government is trying to chokehold on-ramps to crypto, like the on and off ramps, like several of the banks that did go down, like I know, especially for Signature and for Silvergate, those were both very crypto friendly, and they were good on ramps and off ramps for high liquidity crypto exchanges. They could transfer money in and out. I don't think it was enough to make it happen the way that it did. I think this is just pure circumstance that kind of led to those ones kind of going. Maybe so with Silvergate, but I don't think that was the Fed's reaction or what they were trying to do, or not the Fed per se, but the government.
Yeah, I mean, it's hard to say. It wouldn't surprise me if they were trying to kneecap Bitcoin.
Yeah,
especially since some governments are starting to push central bank digital currencies. I mean,
absolutely.
We've been talking about it. It's a lot closer than than the average person thinks it's going to be here. Most people don't even know what it is, but the people who do, if you ask them, when do you think we'll have this in place? So, it might be a while. But, it's, that wouldn't surprise me if that's kind of the play or the angle.
Yeah. And I think, the Fed is going to be launching what they call, and I can't remember if it's FedGo or FedSwap. I need to look that up and see for sure. Right now, I'm just speculating here. But from what I understand, it's supposed to be sort of like a wholesale CBDC, and that's supposed to be launching here pretty soon. Now, the wholesale CBDCs are ones that corporations and stuff like that will use, right, to transfer money on international exchanges, those types of things. It's almost like a way to replace the SWIFT system currently. And that's supposed to be launching relatively soon. When it comes to retail, they're still saying that that's a ways out. However, something like this could spur that forward even quicker.
It sounds about right to me. Or should I say wrong? But yeah.
Yeah. So, and I mean, going back to what Janet Yellen was basically saying earlier was, all those depositors are going to be made whole. So, and from what you're saying, they're going to get half of their money up front, because from what I understand, there was no limitation on depositors being made whole. That doesn't sound like they're making a limitation on those that are only less than $250,000 in their account. Are they making everything whole, or are they putting a cap on it still?
I'm guessing that they're going to, I don't know, the people at Silicon Valley Bank might be politically connected enough where they can be made whole.
And that's a good question, because I mean, I know there was a couple things that happened. I mean, you were talking about that where they had to shore up their finances. I want to say that they were short like $2.1 billion on their balance sheet that they were trying to raise the finances for. And it wasn't supposed to leak. The information was not supposed to leak out. But because they had to get this moved so quickly, they didn't have enough time to put NDAs out, from what I'm understanding, to make sure that nobody leaked the information. So the information leaked. And of course, Silicon Valley Bank is known for startups, venture capitalist firms, those types of things. So the venture capitalists reached out to their companies that they were basically incubating and told them, you need to get your money out of this bank. So when you're sitting on $10 million of incubation funds that are sitting there waiting to be moved and, to prepare this business, that's what caused a big chunk of this bank run.
Yeah.
The information leaked. Those venture capitalist funds were like, hey, get that money out of there now, and told these little firms to go start pulling their cash.
Yep. But it's the big boys who found out first, right?
Oh, yeah, absolutely.
Which accelerated the collapse that much,
Yeah.
Yeah.
So, I don't know. It's still kind of early. I know we had talked about wanting to record and just kind of seeing where the dust was going to settle. And I mean, I don't even know if the dust has settled yet. But so it sounds like for right now, SVB, their depositors are going to be made whole, but the bank itself is supposed to still go belly up, correct?
Correct.
So,
and if you own stock, you're basically SOL. So,
yeah.
And another Jim Cramer for the win.
Yeah. What were you going to say?
Yeah, I was going to say I want to look at his Twitter and see what he's suggesting people buy next, so I can short that.
Well, he's telling everybody to sell their Bitcoin right now.
Okay. No, I'm definitely going to put more money in Bitcoin. What am I going to short to buy even more Bitcoin next?
That's like, and I'm not even lying about that. He just put out like a message a little while ago saying, sell your Bitcoin now. Sell it.
Oh my goodness.
That guy, I mean, and he had said that Silicon Valley Bank was a must buy or something like that, right?
Yeah, no, he gave it the A+ rating February 8th, and it was like March 10th by the time when it collapsed. So like 30 days later. So
another interesting thing that happened over the weekend, and I just want to touch on this real quick. USDC stablecoin, which is run by Circle, it lost parity with the dollar this weekend. And if you're aware of stablecoins at all, like they are not supposed to lose your dollar peg parity at all. And this one did. It went down to, I think roughly, I said 88 cents over the weekend. A lot of that money was in Silicon Valley National Bank, or Silicon Valley Bank, not National, Silicon Valley Bank. And so it caused a lot of tummy troubles for a lot of investors that had their stable coins, had their money sitting in the stable coins, and it was losing its value. Now, something to note that's interesting about this is USD Tether's been the only one that has held strong for basically the past, it's probably been about 8 years or so, maybe a little bit longer than that. But like USD Tether is like one of those that we don't know a whole lot about it, other than every time it gets audited, it is backed and it is proven to be good. But it's the granddaddy, like it's been around for a long time. This one is actually from Circle, which is a subsidiary of Coinbase. So
yeah,
Max Kaiser had said about 90 days ago that this was going to be the next one to fall, was USDC. So keep an eye on that one. don't trust your money in stable coins. Never do that. Like it's good for a swap in and out, but you don't want to keep it there.
Absolutely.
It did regain almost its parity today. It's at 0.9989 cents as of recording right now when we were doing this. So
That's pretty good.
yeah, still, man, I would be so terrified. Now, the other thing that I wanted to bring up before we kind of close out, because I think we don't have a whole lot else to go with, inflation. CPI numbers are supposed to come out tomorrow.
Ouch.
So last month, if you recall, we came in at 6.4% for CPI. Month over month inflation rate was 0.5. So tomorrow when the numbers come out, we're looking for anything below 6.4 for year over year and 0.5 for month over month.
Yeah, because I mean that's the reason that the Federal Reserve's being hawkish with the interest rates is because they're trying to crush the inflation.
Yeah.
But do you think they're going to have the backbone or the spine to do that here soon? Are they going to have to kick on the printing presses to basically
and that's
prop up the banks?
That's why I'm like, if more banks start to fall throughout this week and inflation numbers come in hotter, or even if inflation comes in a little bit lower and banks still continue to fall just because that interest rate's already so high, and they are talking about raising the rate again in the end of March, we could be in for some crazy rides with Bitcoin. We may not see like the drop the way that other people are thinking. I've seen a lot of people, especially from the Silicon Valley Bank debacle, that have been like, you know what, we're going to crypto. This could have the adverse effect of what I think they were hoping would not happen.
Yeah. No, and I've been thinking about it because I thought that the markets were going to crash and then that was going to affect Bitcoin by taking, when the tide goes out, it's going to basically drop every ship.
Mm-hmm.
The inverse of the rising tide, right?
Right.
But with how the banks are collapsing and potentially the faith in the Fed and the US dollar are disappearing, it could be a boon for Bitcoin specifically. I don't know about crypto in general, but Bitcoin specifically, and probably gold.
Yeah.
I mean, I'm not obviously not financial advice, but if I had my crystal ball and I was going to look at what the future would bring, if things keep going down this path where more banks start to fail, the Federal Reserve pivots and starts, turning on the printing press, well, I think Bitcoin has the potential for really taking off here.
Yeah. Yeah. I saw a tweet today that I thought was really interesting. It was from Will Clement. He does a lot of Bitcoin analytics, blockchain analytics, basically for the Bitcoin space. He said, as of today, 74% of all the Bitcoin that will ever exist is now locked up in long-term holders.
Wow.
74% of the total supply, not just what's out there right now, of the total supply.
But the Bitcoin that will ever be mined.
Yep. There's not a whole lot left. And I mean, I know we've said that for a long time, but at some point that's going to sink into people.
Yeah.
74% of 21 million is pretty well locked down. So, and you don't even have to have a whole coin. I always go back to that. Like, I think they say all you need is like 0.001 of a Bitcoin to be like well above the average person. If you could have more, great, do it. If you can't, fine. If you can just have that much, is it worth putting in that much? Like if you could put in that much, and this is not financial advice, but if you can just put in that much, like, and yeah, given every time you wait and you wait and wait and wait to buy that, it gets more and more expensive, right?
Right.
But what is that right now? $24.44?
Yeah, $24 would get you 0.01 or 240 if you just want the 1 cent of a Bitcoin.
Yeah. Like, I don't know. I wish, and that's all you need to do. I don't think people need to buy an exorbitant amount of Bitcoin.
No, definitely don't sell your house and then put everything into Bitcoin.
No.
I mean, if it pays off for you, then you'll be super rich. But if it doesn't, you'll be in the poorhouse pretty quick.
Mm-hmm.
But that's the thing. Everything's so volatile. I have no idea where to put your money that's going to be 100% safe. I mean, just looking at how things run and how Bitcoin's operated since it began, it's the only thing that it's not going to need a bailout.
No.
Right?
No. No. It is, I mean, if it's a fixed supply, we know the inflation rate ahead of time, and it's 1.8%. It doesn't change. All this happens. I mean, Bitcoin still trades. Bitcoin doesn't halt trading.
Nope.
So anyways, yeah, it'll be kind of interesting. I want to see what CPI is at tomorrow. If we don't get to record again soon, we may have to do an episode here pretty soon, depending on what comes out tomorrow. We may have to do an emergency meeting tomorrow. I don't know. But is there anything else you wanted to add tonight?
Nope. You know what? I don't mind doing all these interesting, urgent podcasts, but man, it feels like we're living through history potentially. I mean, depending on how this breaks, it could be something really impressive and it's pretty scary.
Yeah, all the above, right?
Uh-huh.
So, all right. Well, thank you, Rick, and thank you all for listening. We'll talk to you all soon.
Yep. Be safe out there.
Time